There's a secret war going on behind the scenes in crypto, and that war revolves around stablecoins. But why is everyone fighting over stablecoin dominance? And why more so now? You even have Trump-backed World Liberty Fi, a company with the Trump family, offering their own stablecoin now. But for the majority of players, it's already too late to enter the game. Now, over the years, crypto has gone through its many phases, hype cycles, major collapses with Luna and FTX. People were always trying to move to where the puck would be. 2013, it was Bitcoin. 2017 to 2018, we saw the ICO craze. 2021, we saw DeFi boom with meme coins, layer ones, layer twos doing really well. And this cycle, it looks different. But now, after many trillions have been made and lost, we've learned a few things about where the market is now going. And that is one, that money will ultimately flow back to real utility. And Bitcoin, most of everything else will go to zero. One of those companies is Ripple, that offers real utility in the United States and is now offering a stablecoin, which leads me to point two, that stablecoins are one of the most successful business models in all of blockchain and provide a clear and consistent use case with real growing demand worldwide. Why though? Well, that's because everyone sees the writing on the wall. Asset tokenization and tokenizing real world assets will be continually a field of growing demand. And virtually all of these assets will trade against stablecoins that are on blockchains for these applications. Banks will use them, asset managers and funds will use them, and lastly, you and I will use them. Stablecoins are just far better forms of fiat. They're more transparent, they settle far more quickly, and can be used to modernize the global financial infrastructure. And we know they're here to stay because even Larry Fink, the CEO of BlackRock, is building his own exchange in Texas called the TXSE, where all assets offered on this exchange will be tokenized and using blockchain. So in this video, we will be covering the latest step in stablecoin regulation, which is due for a vote this May. We'll be covering what's really going on, where Ripple reportedly made a $4 to $5 billion offer to acquire the stablecoin competitor Circle, which is quickly growing and also highly regulated and available for trade in the United States, unlike many other stablecoins. And we'll even cover this recent article from Ripple on asset tokenization. So as always, my friend, if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. Hello and welcome back to the channel, my friend. If you're new here, my name is Paul and you can find me on Twitter or X at PauliDeFi, PauliDeFi. Really quickly, if you haven't already, get our free ebook that shares or unlocks 23 secrets to help you pinpoint the next explosive cryptos and also avoid a bunch of crap, because there's too much crap in the space and very few that will actually do well. And our goal in this book, especially when I was writing it, was to help you figure out exactly what the criteria are in order to make good decisions when it comes to tossing your hard-earned money or your investment capital into any one crypto whatsoever. If you've been around for more than 6 months, you understand just how volatile and how scary it is to dump your money into something only to watch it dump 70 to 90% sometimes. So that said, this is totally free. All you have to do is enter your email by clicking on this button and you should be good to go. And yes, you'll find that link in the description below, bullrunners.com/altcoin secrets. So let's dive into the video. Now, this is actually really interesting and big news, and this has actually been confirmed, I believe, by now Bloomberg. The fact that Ripple reportedly made a $4 to $5 billion offer to acquire their stablecoin competitor Circle. And so if you were to come over to CoinMarketCap, you can see that Circle is quite a large player with their USDC stablecoin currently sitting at a $61 billion market cap. It is the second largest stablecoin by market cap, right behind Tether, sitting at $148 billion. So currently the stablecoin market has about $200+ billion in global liquidity. That is obviously far surpassed by Bitcoin and arguably on par with Ethereum, the second largest crypto by market cap. However, by many estimates, stablecoins are going to continue to grow over the next 5 years and into the next decade to the tune of trillions of dollars as we see more asset tokenization and real world assets on the blockchain using stablecoins as a pairing. In other words, if I wanted to hold tokenized bonds, if I wanted to hold tokenized stocks, all on the blockchain, I would trade them against not fiat currency, not through traditional banks, although banks will offer this stuff. I will be doing it on blockchain using stablecoins. And this is further verified by on-chain analytics. This is from CryptoQuant, all stablecoins in the market. That actually bottomed in November of 2023. Now, at the start of 2023, the bull market actually began because we bottomed and started putting in higher highs and higher lows, and then peaked off on Bitcoin and XRP sometime in January of this last year. Or excuse me, at the start of this year. However, since that point in time, you can see that stablecoins have been on an absolute tear through the entire bull market of 2023 and 2024. Now, in typical scenarios and situations, right, you only see this type of growth where there is demand. In other words, companies aren't going to go ahead and buy and hold dollar equivalent assets to one-to-one back them, especially players like USDC or RLUSD, unless, of course, people are actually out of stablecoins on exchanges. Exchanges need to offer stablecoins to trade against or pair cryptos. So if you see an explosive move of growth like this, it's typically indicative of lots of demand. And I expect this demand to continue growing over the upcoming years. It's arguably one of the easiest plays in all of crypto. Now, we're not here because we're going to hold a stablecoin and make money from it, but a lot of companies are vying to dominate the market in stablecoins because they are so ridiculously profitable. Like, I don't think people realize how profitable. And when Tether started coming out with numbers like this, every company in the crypto world was shocked at just how much money they were raking in. Tether casually made a $13 billion profit last year with only 100 employees. And we're not talking $13 billion in total business. We're talking in just profit. For comparison, BlackRock, with thousands of employees, almost 20,000 employees, made only $6.4 billion in profit. Deutsche Bank made 3.5, PNC Bank 6 billion, Bancorp 5.5, Goldman Sachs was just up there at 14.3, and these are some of the biggest banks in the world. But when you only have 100 employees in a $200 billion market, the writing is on the wall, especially when all asset tokenization is going to require it, which is why Ripple is making some really big plays and moves to expand and grow in that space. First, by buying that prime broker at $1.25 billion, and then making an offer to buy Circle for $5 billion. However, the bid was rejected, and I think Circle knows that they're going to be worth far more anyways because they're already on their way to rival a player like Tether, which is by far the largest stablecoin in the market. They basically said that the offer was a little too low. And so Ripple would have liked to have all of that Circle business, but instead they're going to have to compete and they're going to have to grow their stablecoin. And arguably that prime broker is going to be a key to doing it as they move everything on the XRPL. Now, not all of the business on their prime broker Hidden Road will be moved on to the XRPL, but their goal is to do a lot of that to increase their revenues and the total amount of their RLUSD stablecoin that is available to the market for all sorts of use cases that are going to be extremely valuable in the future. Again, I shared this last time, but I think this is huge, right? Stablecoins are just the tip of the iceberg. Now, stablecoins aren't valuable unless they're tied to a asset or a fiat that the majority of the world is currently using and is in demand. And the dollar is still globally the leader. That said, we're talking you would trade and use stablecoins for treasuries, commodities, funds, debt, equities, derivatives, real estate, insurance, infrastructure, and even art. And so this is why a player like Larry Fink over at BlackRock said this earlier this year. Let's have a listen.
As a huge believer of crypto and blockchain and tokenization, I want the SEC to rapidly approve the tokenization of bonds and stocks. That will simplify things, make things easier. Some of the tax on BlackRock would never have to vote on a proxy vote anymore because every owner of record would be notified through a tokenization of equities. And it would save more money for more people. It would bring down the cost of ownership of stock and bonds. So those are the type of financial reforms we need.
Right. And so think about it. Although not everyone is going to go buy Bitcoin or XRP or any of the other large cap cryptos, everyone eventually is going to want to use stable coins. And yes, those stablecoin companies earn a portion of fees and revenues to offer that service for the tokenization of bonds, which are the largest market in the world in terms of real value when it comes to debt. Now, I'm not talking about the derivatives market. That's a far bigger number, but debt is such a large player and stablecoins will be involved. Then you're talking about the stock market, which is still tremendously massive. And virtually every single American in the United States that has a 401k, a retirement, a pension is in the stock market. And guess what their fund managers will be using to buy stocks with? That will be stable coins. So stable coins are consistently going to be in demand. And in this article from Ripple, they only serve to confirm that. The fact that there will be investment grade bonds, there will be real estate that is tokenized. Imagine if it makes ownership of real estate a lot simpler because you no longer have to go through this long drawn out process and then use fiat currency, but instead you and I and 20 other people could own one piece of real estate through asset tokenization on the blockchain, which actually verifies our identity privately. Really cool stuff in technology. We're talking collateral and liquidity management, trade finance and working capital, treasury and cash management, and so much more. Now, if we're talking just about stablecoins not even being used for asset tokenization, at the end of the day, they are still some of the best use cases in all of crypto. As this gentleman shares that stablecoins have been the only non-speculative crypto use case he's seen with the right product to market fit, which is huge when it comes to adoption. The fact that it is an inflation hedge against many other currencies, not the US dollar because it's tied to the US dollar. The fact that it's modest, but it has a sustainable yield. In other words, I can hold it and earn interest on it. You can do person-to-person payments and remittances. And eventually this will be integrated through Visa and MasterCard, mark my words, to do point of sale systems. In other words, this fiat is truly borderless. It's the internet of money using the current financial system, but globalizing it. And arguably a lot of these governments are going to struggle to support and write legislation that harms their own currencies, but they will support and write legislation that supports it, which is why the Genius Act is due for a vote in May. Now, Senator Cynthia Lummis, I believe, is the one behind this bill, alongside Mr. Haggerty, Mr. Scott, and Mrs. Gillibrand. However, the goal of this bill is to set reserve requirements and oversight rules aiming to balance innovation with consumer protection. In other words, stablecoins that are one-to-one backed by cash or cash equivalents and can be redeemed directly for fiat through the US government. Now, I believe this is likely going to pass or move forward simply because everyone is now on board. Whether it's Paul Atkins over at the SEC, whether it's the Fed and Jerome Powell talking about the need and the necessity of stablecoins into the future, whether it's the fact that banks are now to bank crypto, or the fact that virtually everyone in Congress to Donald Trump is pro-crypto. And with the passing and legislation of a stablecoin bill, you're going to see even more growth and demand across the board from all institutions and funds. So it's no wonder Ripple would want to acquire a USDC for bare minimum $5 billion, which is pretty big because USDC is currently leading in a certain area. For example, 80% of the US-based crypto exchanges offer USDC. It's integrated with Stripe, Robinhood, and Visa. It is one-to-one backed fully by US treasuries, and aside from RLUSD, it is deemed the largest regulated stablecoin. In other words, it is MiCA compliant and it also do well in Europe. And so if for whatever reason Ripple was actually able to acquire Circle and USDC, they would absorb not only the infrastructure but their clientele. And I would argue they probably wouldn't rebrand it because it's already got a really big brand. However, they would likely take a lot of that profit and revenue and pour it back into the XRPL, that ecosystem, expand their global reach and partnerships, and a lot of that money would find their way into the XRP token as modern infrastructure reaches global scale. And so ultimately, to finish the video up, Ripple was obviously not able to get the deal to go through, but just the fact that they made this offer is massive because it actually states or tells us more about where they're at as a company. They are truly trying to dominate the space and position themselves as the backbone of the future of global finance. They're forward thinking, they've built their stablecoin, and ultimately they're still in a good place to grow that stablecoin business and see the XRP token do well long term. But they're competing, they're trying to acquire, they're cash rich right now. And so if they're in a position to dominate, they might as well try to dominate at every single level, which bodes well for XRP holders. And so far, the token has consistently been holding up relatively better than virtually every other major market cap crypto, which speaks volumes to the diamond hands and the demand. So with all of that said, there is a lot more alpha you could be taking advantage of in the crypto market as this bull market continues. Every single Tuesday, I personally host a live technical analysis call for our university members where they're on live. We can chop it up. I teach them everything they need to know about indicators and looking at charts and understanding the fundamentals and ultimately becoming confident in looking at a chart, making their own decisions using their own drawings to dominate the crypto market. But that's not all. You also get access to courses and classes. Our DeFi analysts and team of professional researchers share all sorts of altcoin picks, DeFi yields, and airdrops, and we offer so much more. Honestly, the value is truly endless. It's a game changer, and it's only $97 a month. But what makes this thing truly cool is the fact that we share weekly DeFi yield picks that could essentially cover your Altcoin Pro University membership. In other words, if we're able to actually help you within 14 days to earn a monthly yield using the crypto that you already hold and own in a very safe manner, because we're pros again, and again, nothing is guaranteed in crypto markets. It's just we've done everything under the sun in crypto, whether it's made mistakes and made money. And so we kind of know how to navigate the waters of crypto in such a way that we can teach you in a very simple and applicable manner how to win in crypto and put your money to work. In other words, the goal on this quick win would be to earn you back your 100 per month yield to cover your Altcoin Pro University membership. Now, in one situation and scenario that we're currently sharing this week, $24,000 in crypto would generate you about $2,000 per month in a JLP pool, which again, we explain exactly how to do inside Altcoin Pro University. If you scale it down, you would literally only need about $1,200 in crypto in this specific pool to earn your 100 per month yield. That covers the cost of this entire membership. And at that point forward, you have nothing to lose and everything to gain. And worst case scenario, let's say it doesn't work out for you. You can still ask for your money back within 14 days. So you truly have nothing to lose, but the value that you get here is so rock solid. And I would argue, bar none, we offer the best tools, training, and resources in all of crypto, and we hold ourselves to that high standard. So anyways, go to bullrunners.com to check out Altcoin Pro University. You can watch this quick 13-minute video to see all that we have to offer, and then go ahead and get started. Just try it out. And that said, that is it for the video, folks. If you enjoyed it, be sure to subscribe to the channel, and also I will see you in the next video. Goodbye.